Alright, good morning peeps. It is Thursday, December 30th. I wanted to do the prep live this morning, but quite frankly, I don't know how to schedule the YouTube live thing. And Amelia, who usually does that, is out of town right now, so Amelia, I don't know what to do without you. But we'll take a look here at the market, guys. We got about an hour and change here before the open. I think Chandler gave you guys a good video last night. A lot of what he discussed was, you make a big push, you kind of chop here, but all the chop does is give you some really good-looking squeezes. So, for your S&P futures, weekly squeeze, 3-day squeeze, daily squeeze firing to the upside, 2-hour and a 60-minute. So it's a little bit of chop here, but it's all good structure. It's all in a good trend. I think we continue to trade higher. And then for the Q-tips, these bad boys are shaping up pretty good as well. Weekly, 3-day, daily, 4-hour, 2-hour, 60-minute, 15-minute, 5-minute. Whole bunch of squeezes here for the Qs. And you got a pretty obvious target here at the previous all-time high. Histogram continues to shift, so everything looking pretty solid here for the Qs. And then for the Dow ski trying to break out here to a brand new all-time high as well. Weekly, 3-day, 2-hour, 60-minute squeeze. So we're going to see, we're going to have these days where things really aren't going anywhere. So look for a squeeze on a lower time frame. A lot of times that's going to trigger the next pretty solid move. So your S&P, your QQQ, your Dow, they all look pretty good here. And like I've been mentioning with the small caps, if this can just trade at the 21 EMA, then the Qs, the S&P, the Dow, I think are poised to go on ahead here and rally into early January. So last night on Twitter, on my Twitter page, I did post a few good-looking setups here, which we'll take a look at right now. So the first one here is Dollar Tree. And I think I mentioned yesterday morning, one of my goals this year is same setup, same trade, same entry, same exits, same everything, but just more of it. So opening up my opportunity set to names outside of the Teslas, the Googles, the Amazons. So on Monday in my mastery, we're picking up a little bit of Dollar Tree here, and you got a perfect setup. Stacked DMAs everywhere, green 10x bars, basically on every time frame. And I think on Monday, you had a daily squeeze all the way down to a 5-minute. So we took our entry there, and we're looking for a push into about 145. If you get a dip back to the 21, I think a pretty good entry there. Then in the options room, and I probably, if you get a little bit more, if you can get a little bit closer to the 21 EMA here, probably get the mastery into Ford. But I think this is one of the better looking setups out there. Weekly and daily stacked DMAs, weekly and daily green 10x bars, daily 1-hour, 30-minute squeeze. Histogram shifts here, so I think you could get Ford into 21.5, maybe 22. So pretty good stuff there. And then you have Qualcomm. So the semiconductors in general here, it's a group I think is going to be trading at brand new all-time highs over the next couple of weeks, just based on the good old structure here. So names like Qualcomm, I'd love to see if they could get a little bit closer to the 21. And in the training room yesterday, we were talking about this. When you're trading these squeezes, measure your reward in the form of average true range moves, where typically a good squeeze is going to take you from the 21 EMA into about 2 plus ATR. So if that's your upside, right? 2 ATR above the 21 EMA. And if you get long Qualcomm here at +1, you might have, as far as a reward here, one average true range move to the upside. But then in terms of the structure of the setup, it's really bullish all the way down to like 170. So unless you're trying to get shaken out into noise here, your upside is +1, your downside is about -2.5, -3 ATR. So the key here, take your entry as close to the 21 EMA as possible. Then the risk reward's working in your favor. So I'd like to see a dip here on Qualcomm. Then for the rest of the semis, like Broadcom, beast mode but too extended. Micron, a little bit too extended here. But I think AMD, as that pulls back to the 21, it's got a great structure, especially as the histogram. So even yesterday, you're down a good 3%. Histogram shifts towards positive here. So I think a pretty good looking daily squeeze shaping up for AMD. But just again, the group in general here, to me, looks pretty bullish. Next up is Google. So, in my opinion, and of course things could change here, and I'd say things change if Google starts to trade under about 2,800. But in my opinion, Google's gearing up here for a pretty good move. You got a really solid daily squeeze nested inside of a really clean 3-day. Really good 3-day. And a beautiful weekly squeeze. So my thinking here, because the spreads on Google are just kind of trash, unfortunately, you could go January 21st expiration. Pick whatever expiration date you'd like. Keep in mind you got earnings coming up. But for me, I'd want to kind of, because of the crappy spreads, decrease position size, increase risk reward in my favor, and set something up here around, the 3,000 level. So kind of placing a bet here that over the next 4 or so weeks, Google's trading at or above 3,000. So you could do in the money put credit spread, sell the 3,000 by maybe the 29.90. As the market is closed here, so the spreads are going to be pretty weird. All right, but you could do the in the money put credit spread. You could do something like, a 29.50, 30.50 out the money call debit spread, which offers a good risk reward as well. Just nasty options here, unfortunately. So, I'd love to come do that 2,900, 28.90 put credit spread. Bid and ask here is 90 cents by $3 and change. So you can get that 2-to-1 risk reward ratio if you can get filled at $3, but if the trade comes against you, it's going to be tough to manage. The spreads are just, nasty. So I think you got to just structure something here, because the squeezes look really good. And then last one I got for you here is Apple. Now, definitely a little bit extended here, but you do have that psychological level at 183 and change, which is where Apple becomes, I believe, the first $3 trillion company ever, as far as market cap goes. So it's not the best entry. And really, I think the good entry was back here in the 4-hour squeeze last week. So we took a little bit of that last week, still holding it here. But, coming into today's session, you have a 1-hour, 30-minute, 15-minute, 5-minute squeeze. So if you are looking for a push into a new high, which you should try to link up, I think, or you should try to time with the QQQ breaking some hourly squeezes. But if you're looking for a push into new highs, and if you're looking for that push into the 183 level, that 1-hour, 30-minute squeeze could offer your entry. But that's what I got for you guys this morning. Right? A few clean setups here. And until something changes, I think the index has got a bit more upside to come over the next few weeks. So I appreciate you watching. If you haven't already, go on ahead and subscribe. And Chandler will take you into the end of the year tomorrow with his live pre-market prep. So looking forward to that. Looking forward to the new year. But I'll talk to you guys soon.